Since 1987, we've helped investors navigate the markets using technical research focused on relative strength, supply and demand, and momentum. From sector rotation to asset class rankings, we highlight what drives performance. NASDAQ Dorsey Wright, helping you stay one step ahead.
Hello, everyone, and welcome to the NASDAQ Dorsey Wright podcast for June 3rd. Podcast. Last week I said webinar. I went back and listened to the podcast again. I said, welcome to the NASDAQ Dorsey Wright webinar. Not a webinar, it's a podcast, kind of similar. Regardless, how you doing, Miles?
We are doing well. It's the first, I almost just said webinar as well. It's the first podcast of June.
Yeah.
The summer is just getting started here. Things are warming up in Richmond. We're doing great. Markets are staying hot. Really, what more could you ask for?
Yeah, I mean, you said things are just warming up. I mean, it was like really hot here in Richmond a few weeks ago. It cooled off a little bit. The last week was amazing. Yesterday was the best weather we've had in a long time. And this week it's back to 80. I saw by Friday it's supposed to be 92 again. So,
nice. And then we're gonna get like a monsoon like we got for the last 10 days or whatever it is.
Yeah.
But yeah, no, we're all good. You got any fun plans this summer as we look forward to it?
Few trips here and there, nothing super major. I know you got some wedding prep probably.
Yes, yeah, we're just I get reminded by my wonderful fiance, if you're listening, Gabby. What are we, like 65 days out or something like that from the big day? She is.
Nice. Well, when we kind of pivot back, a lot of other big things going on in the market action over the course of the past few weeks. But over the course of the past week or so, we were talking just a little bit beforehand, been some sharp action, or at least consistent action over the course of the last week, right?
Yeah. So, I mean, most of it feels like every single time we get on the podcast for the last month or so, we've been saying markets are positive. I think the S&P 500 is up, like 9 straight weeks or something like that.
Yeah.
It's some crazy record, knock on wood. But the S&P 500 up around 1.2%. Emerging markets, our biggest gainer over the last 7 days, up 3.5%. The Dow in there as well. Not too many names in negative territory. Commodity-focused areas down there, though. Gold, crude oil, pretty much flat, but there are negative names down around 14 and 30 bips, respectively. But besides that, most of the market's really just continuing to chug forwards. Technology leading the way. But yeah, another really just productive, another productive week.
Yeah, I mean, when we look at, you put a piece in the reports looking last week at like a technical picture for the S&P, or not last week, you put it on Monday. Starting up June, hey, what are we looking at in the S&P in June? So I'll go ahead and share my screen real quick. Why don't you kind of take us through what that chart looks like and kind of what were you were looking at in the piece?
Yeah, you're looking at like the default chart of the S&P.
I'm just looking at the default chart of the S&P. Yeah, is that what I should be looking at?
Yep. Oh yeah. So I mean, we've got and started off or closed out May, I suppose you could say, with another buy signal here, notched for the S&P 500, pair of consecutive buy signals. Now, while we are a bit overbought, as you can see by that weekly OBOS reading of around 100 at the time of this recording on the 3rd. What is encouraging about this is that we've established some support around that 73.50 mark. Now, before that, right, and what's encouraging about this is, that gives us a place to retreat to if we do see some sort of exhale as we wrap up Q2. Before, right, we were on a big stem of 23 X's. And when we got that initial reversal, we're like, here comes the roller coaster, right? There's not a lot of support until all the way down to those 2026 lows.
Right.
And if you even wanted to say maybe some old resistance around 7,000.
Right.
But point of that is that we get a reversal back up, push to new all-time highs, and some support just nearby now.
Yeah, I mean, that's a great point. I was looking at it. So for those following along, even if you're just following along on the platform yourself, if you right click on any column, you can see when the reversal date occurred and actually when each box was added,
right?
And the number of boxes. So that's how I know you didn't count 23 that quickly in that column, but you can see the reversal down in O's occurred on 5/19, reversal back up in X's occurred just a few days later on 5/22, right? And so to your point, it was, hey, we don't have any near-term support lower, but this is the kind of movement you'd expect, right? It's very, we don't typically see 23 straight X's up. And on the flip side, we don't typically see 23 straight O's down.
Right.
A little bit of back and forth action, maybe some more consolidation wouldn't be super surprising as we head into what is typically a slower month. I mean, June, historically, you were looking at some stuff in the report. It's a little more muted. The extremes aren't as wide.
Well, that's a good point. So the extremes are not as wide in terms of the range of min and max values that we've seen.
Because why don't you describe that piece? Or maybe I can, while you're describing it, jump back again for those that are following along and take a look at it.
Yeah. So this piece that Ian is pulling up is a just the one is the chart, right? And then the second is the monthly S&P 500 returns going back to 1987. And we've highlighted there with that black box the historical returns in June. That green. The green box is the maximum return that month experienced throughout the entire time frame. The red box there is your minimum. So the range from around 9.11 to 7.9% negative is tighter than other months.
Right. And that sounds like a big range. I think that's an important point to note. If you're not following along, if you're just listening, it sounds like a big range, but it's a tighter spread than we see in a lot of other months. I mean, the average in and of itself, it doesn't move around all that much.
Right.
I mean, it's like plus or minus a couple percent at max, right? The maxes can get big. The men's can certainly, if you're looking at September, like minimum down 17% in that month, right? They can get deep, but the spread between, I mean, June just tends to be pretty muted. I bet if you put a picture of VIX movement up here and similar action split up by month, would probably be toward the lower end.
You know what? I also think if you put a average beach attendance graph over this, I think you'd also probably see a notable spike in June. Probably why the market's a little bit quiet.
Hey, that's that selling day go away, right? You're saying
something like that.
Everyone's going to the beach.
But yeah, historically speaking, right, that spread is tighter. However, you mentioned that the averages, they're all within earshot of each other. I do just have to give June its credit. It is the third best month on average, following
Not
March.
Trying to take away from June.
Yeah. Following March and October. So point of that is, although markets are overbought, if seasonality has anything to say about it, we could see a little bit more of a quiet month from an extremes perspective,
right.
But there's still some in the tank from a, again, historical perspective if we get the average June.
And when we're looking at other, I mean, obviously no market environment's the same. Everyone's different. Markets don't repeat they run. You can enter your additive there or whatever it is. October is an interesting comparison, and honestly, so is February to look toward. October, we put that piece out in the fall, but love hate October.
Yep.
Some Octobers are really good. Some Octobers are really bad. The average actually comes out to be more positive than most other months.
Right.
And so the fact that June's right behind that, again, in month of June, when I think about great months for the market, I mean, you don't really think about June. Like you said, you're thinking about the beach in June. You're not thinking about trading. Maybe things change. But I think that's good perspective to keep it. At least seeing those averages is always, it's not necessarily predictive of market action.
Yeah.
It just kind of helps you give you some perspective on what we can see. It's rare that markets actually match the averages.
Right.
The averages are there for a reason. Right?
Certainly.
Yeah. When we're looking at other things that have been pulling the market higher, I guess, right? We come on here every single week. We could just call it the technology podcast.
Right.
I feel like at this point, because we are just continuing to see most of these technology names, with the exception of a few names today, just continuing to rip higher. Really, semiconductors in particular, just continuing to ascend. But that actually led to technology moving back into the top position in our DALI sector rankings, right?
Yes. So we've seen, and for those who are unfamiliar, right, DALI stands for Dynamic Asset Level Investing tool, which is essentially just a whole bunch of relative strength tests. So comparing assets up against each other, seeing which one's strong. And we can do that on a broad asset level. So international equities, fixed income, domestic equities, commodities, or in this case, like Ian and I are about to reference, is going to be on the sector level. And so what we've seen just recently is technology moving back. It had fallen down to what its lowest was 5 or 6 or something like that back in April, but has recently reclaimed that top position, signaling, hey, technology is head and shoulders above the rest of these groups. Energy still up there, but has been shedding strength recently. But technology, as you mentioned, Ian, on the back of semiconductor strength, moving back up into that number one spot.
Yeah. And I've pulled it up for those that are on you. I pulled it up on the screen, looking at the daily ranking for the 11 sectors over time. And as you said, Miles, it moved down in March to the 5th position, stayed there for a couple weeks, not too long, not even 2 weeks. And then by March 19th, it started moving back up. Now it moved to 4, moved to 3, moved to 2, and then finally moved back to 1 Thursday of last week. The buy signal count, I think, is pretty interesting to note there. And what I like to do is I like to look at this on a month-over-month basis. And to be honest, when you look at it over the past, if you look at it since the end of April, so inclusive of all the movement in May, I mean, you saw technology pick up almost 60, over like 55, 53 buy signals there through the course of May, which is a lot.
Right.
That's a lot of bicycle improvement in 1 month. That's far and away the most of any sector. I mean, we saw energy lost a few, less than 20. Industrials lost 5. Comm services stayed the same. Basic materials picked up 3. You didn't see a ton of movement from a lot of other areas. You saw massive improvement from technology.
I think that's also, it's even more impressive, not to cut you off,
No,
but it's even more impressive when you think about what was gaining those signals. It wasn't necessarily other parts of technology. It was really just semiconductors. Software picked up a little bit, right? We've seen a rebound out of them, but for the most part, what has been impressive about this is, what is driving that signal gain, and it's such a focused group within the tech
and
group.
it is. And so when you look, without looking at the rankings, what was the biggest loser? You probably already know this.
I mean, hopefully, I wasn't.
Consumer cyclicals.
Oh, really?
Lost down. It's
Wouldn't have said that.
it is in the 9th position, down in the bottom kind of weak area. Lost 23 signals from the end of April through yesterday, which I would not have guessed. A lot of
No, I
times,
wouldn't
and
have.
when we saw a lot of movement historically, technology and consumer cyclicals both considered kind of risk on
Right.
assets. I mean, they tend to track one another a lot historically, right? Not the case this time. We've seen a lot of that technology movement actually pick up signals from consumer cyclicals down at the other end, which is surprising. Something you don't see that.
I wonder if, and I'm just talking, I wonder when the last time that consumer cyclicals and consumer non-cyclicals were both on technical underweights or in the bottom 3 of the Dolly rankings.
Yeah, they tend to don't hang around one another a lot, right? And another 2 areas that don't hang around each other are technology and energy. I
Yeah.
mean, those, we've put stuff in the report over the course of the past few weeks around that. It's very rare to see those 2 as the top 2 places in Dolly. So,
Right.
like we were saying, every market environment's unique. There's obviously different catalysts that affect every movement. I mean, the movement in energy is easy to explain. Crude oil, huge shot higher, still kind of hanging around that 100 level, right? Kind of back and forth, up and down over the course of the day to day, depending upon what tweet or news article goes out there.
Right.
Technology, like you said, super focused strength that semiconductors have just, I mean, those areas have all ripped over the course of the past couple weeks. I was listening to someone earlier on CNBC said that they were late to the game buying Micron. I think they bought it at the end of April, and it's up 80%
Late to
since
the
then.
game. Yeah.
Right.
We've
It's
doubled.
like 220% year to date.
Yeah.
Crazy movement for a lot of these areas. I mean, you would think that a lot of this stuff can't be sustained, but then you look at stuff like, I thought it was really interesting, tangential with Google is issuing more stock
Right.
because they need to fund more. I mean, so these companies are still, that's maybe considered a little bit of a bad thing, but I mean, companies needing to look for capital. There's a lot of demand for these companies to continue to grow out there. I mean, that at the end of the day, more build out and more money going into these areas. I mean, that's a good thing for the space. If they think the demand's there, I mean, then hopefully it is.
Yeah. Speaking, we put this out on Twitter, but kind of on that path, we were looking at Broadcom ahead of earnings after market close today. So they're stale. It's not an earnings comment. Point of this
I
is
won't put it up, so I don't jinx it.
Broadcom up 40%. It ranks within the semiconductors in the bottom third of that matrix. It's up 40% this year.
That's crazy.
So, I mean, just to talk about how strong the semiconductor group has been, how much of the market, not only from the technology perspective, but just from the broader market perspective, it is really just grinding. And, we're sitting there around the office talking, your major indices are essentially flat. RSP is flat, equal weighted is flat, whatever it may be. But, your semiconductors are up 3% that day. And you're like, this is just an interesting market environment. Let's put it that way.
Yeah, super interesting market environment. And I think you've seen that reflected in a lot of the participation indicators too, right? I mean, there's a lot of fear, I guess, going on, like, oh, like we're so top heavy. The rest of the stocks aren't doing that bad. They're just
Right.
not.
Yeah, they're not.
80% in a month. Right? I mean, that's like there are levels to this, right?
Yes,
It's that's why we look at relative strength. To your point, but when you look at like the short term, 10-week for the S&P 500, again, not putting this up there, but just to talk about it, 56% normal territory in a column is not that bad. Percent positive trend for the S&P 500, also 56% normal territory. It is on in a column of O's, right? So not the best direction to be heading, but it's not like it's below 50.
What do you think? Have you looked? Is this where you were going with this? What's your TW semi?
TW semi? No,
Take a guess.
I haven't.
Don't pull it up. What do you think it is?
60%.
Come on, get those numbers up.
96.
93%.
What about okay?
It's reversed back down. But, that speaks, and for reference, Ian and I are jumping way off topic, but
Yeah.
TW, our 10-week indicators, measure the percentage of the universe that's trading above their 50-day. So it moves around a little bit more quickly. So that way, when we say, well, the S&P 500 is there around 60, semis are up around 90.
It means 60% of stocks in the S&P 500 are above their 10-week or 50-day moving average.
Right, exactly.
And for semis, 90%.
90%. Yeah.
That's for software.
I mean, well, you've seen a little bit of a bounce, maybe what, 25%, 30%?
64.
Really?
Yeah.
Man, I wouldn't have gone there.
Sorry, 66. The chart level 66, readings at 64%. Right? I mean, it's seen, which is totally normal.
Yeah.
I mean, that's kind of speaks to that point, right? We're not seeing software has been a lot of big names, and we're seeing a lot of software names move lower today after some negative news. What Palo Alto reported last night? We're recording that Wednesday afternoon, June 3rd. I think CrowdStrike goes tonight. We'll see what happens with that tomorrow. I think there's still some headwinds from the AI takeover from cybersecurity and that stuff within the software space. We'll see how that stuff plays out. But I mean, it's not like all these indicators are super washed out, right? It's not like honestly, I think it's different than the Mag 7 when we had just 7 stocks and the RSP continuing to move lower, whereas the S&P was making new highs. I mean, we had the RSP just hit a new all-time high on its chart yesterday. It broke out, gave a double top breakout, completed a bullish catapult pattern with movement on Tuesday.
Right.
That's like its fund score is not great because it's not cap weighted. It's still up 10%, and it's still sure doesn't look that bad.
No, yeah, I mean, besides the fund score, which is just at 3, right? But we're seeing all of us as we kind of continue to prance around or beat around the bush of the same idea, which is, we're seeing continued dominance from these names. Now, obviously, as you alluded to before, Ian, there's certainly questions about how parabolic this can be, right? How much of a right tail event we really are in right now, because it certainly feels like one. But that's the good thing about following price, right? Is that it will tell us when kind of the run has exhausted itself.
And when we think about things going parabolic or maybe to the moon, right? We can pivot from there into the next conversation that we're going to look toward around IPOs.
Yes.
Right. So SpaceX is expected to start trading next week. And so I know there's been a lot of conversation around that. You can look at, I mean, I think yesterday when I was there, we put a piece in the report about kind of movement around IPOs, like historical IPOs. There's not really a frame of reference for SpaceX expected valuation. I mean, they're expected I saw 1.5 trillion, put that in. Wall Street Journal update last night, I saw 1.75 trillion. We're just making up numbers at this point.
One Google, right?
Yeah, exactly. But then, I mean, they're expected to raise like 75 billion, I believe, from the IPO. And so the largest US company historically, I believe prior to that, was back in looking at I think it was Visa in 2008 and 17, if I'm remembering that correctly. I put it in the report. We can go take a look at it.
Is that amount raised adjusted for inflation?
Probably not. 17.9 billion. There's other international companies that have maybe raised more from an IPO, like Saudi Aramco, but there's not really a good frame of reference for what to expect from SpaceX. And there's other changes to some index methodologies that got a lot of people talking about stuff over the course of the past couple weeks. We won't necessarily touch on any of that, but what we can talk about is how to maybe look toward exposure or maybe sentiment from some of these areas. And we're seeing a lot more IPOs are more in the news now. People are talking about it. I've had a buddy talk about, hey, should I buy this stock that just IPO'd last week? And I'm like, I've never heard of this company. I also I'm not really, can I tell you what to do there? Hire a financial advisor. That's my advice.
Legally, I can't.
Yeah. My advice is get someone to tell you what to do.
Yeah.
And so in looking at this movement though, IPOs have been doing pretty well. If you look at IPOs, like a good chart, I'll pull the chart up here now. For those following along is the Renaissance IPO ETF. And so this ETF looks at recent IPOs. They have to have IPO'd within the last 3 years. It just takes the biggest ones of those from the U.S. There's a separate one for international, but this is looking at the U.S. side of things. Chart's done very well. 5.75 fund score. You're looking at 4 consecutive buy signals, reaching new multi-year highs over the course of the past week, and sitting in overbought territory like a lot of the market is, but pretty good looking chart.
Yeah, I mean, here we go. We talked about it first with SPX. Now we can look at it here. We got support relatively nearby, if we want to call it that, kind of in the upper 40s. We'll also note that's around a point of old resistance back from earlier in 2026, which we talk about a lot about building a confident picture. So yeah, I mean, really not too much else to say besides that. Strong fund score, 4 consecutive buy signals, nice support. I'll also offer looking back at 2021, obviously.
So that's what I changed the chart to a 2-point per box size
All
scale.
right. I'm following with you.
And yeah, it was literally, it's like like you were driving the ship there was directly insane. It was a lot higher in 2021.
Yep.
And you look back at the number of IPOs, guess when they peaked?
What, 2021?
2021. Yeah.
Yeah.
Over 1,000 IPOs with the SPAC craze back then, right? We're at like 150 year to date through the end of May. So not even the same vicinity. Like
Right.
it's just not even close. So obviously it makes sense that IPOs are going crazy. You expect those highs to be back there, but church still looks pretty good right now. So it's maybe not back to the IPO craze that we saw then, but honestly, it might be a good thing. Yeah, and then looking back at 2021, I mean, we saw those IPOs peak there up in the thousands. I mean, at the end of the day, it's probably a good thing we're not in the SPAC craze
Right.
again, right? But the chart doesn't look that bad.
Well, you talk about quality or quantity over quality necessarily, and we're not making speculations about the quality of SpaceX or any of the new IPOs, but obviously the SPAC craze was certainly an interesting time for the for the market. And as you look forward in 2026, some very, very large and household names possibly coming. Obviously SpaceX is the one that we've referenced, but you've got Anthropic, you've got OpenAI, so there's a whole lot of different beasts possibly coming to market here soon, which is certainly interesting from a whole market dynamic perspective, I think.
Yeah, absolutely. I mean, we don't know how any of this stuff's going to play out, right?
Right.
We don't know. These companies are so big. There's all this conversation now about, hey, are we sure that it's a good idea to let companies be this big in the private markets? I'm like, well, you can't really. If you want to try control on that, good luck.
Right.
But we don't know how these companies are going to do. We don't know how pervasive. Goes back to the whole AI play, right? Trends can go on for a while, right? We'll see how long these trends play out. We'll see how that affects market action moving forward, I guess. But I've also seen some headlines floating around recently, and coincidentally, you put some stuff in the report this week about maybe where's all this. I think part of the conversation around this, where's all this money going to come from? Right. Where is all the money for SpaceX next week? Where's it all going to come from? Is there that much demand for it? And you've seen maybe some flow action that I don't know if there's any legitimacy to it, but people are saying that, well, maybe some of the same people that love Tesla and their particular well-known CEO also might love Bitcoin. And
Dogecoin.
sorry, yeah,
Yeah.
Dogecoin.
Yeah,
Can you
Bitcoin.
still buy a Tesla in Dogecoin? I don't know.
I'll try next time.
Haven't tried that
Yeah.
one yet. But maybe some with the excitement around SpaceX, you've seen Bitcoin go the other direction.
Yes.
So that's not a new thing necessarily, right?
No, not necessarily. I mean, we saw at the beginning of 2026, well, really actually at the end of 2025, we saw Bitcoin fall off of its highs. And we can take a look at Bitcoin representative IBIT for this.
Right.
But what we've seen is ultimately, late in 2025, you reach your high, ultimately then fall back into a negative trend at that point. Nice trend break if you're following those trends. Nice trend break, ultimately came back up to that bearish resistance line on our default chart at the beginning of 2026 and then just cratered lower.
I mean, really nice consolidation. It's pretty wide. I mean, I'm not going to do the horizontal price objective calculation off the top of my head, but there is one of those out there.
Yeah.
And I bet it would have been pretty good when it went back to a bicycle.
Exactly. Yeah. Then you're sitting there and you're saying, okay, well, we tried to put in a bottom, right? You can kind of see the lows there coming in around that 35, 50 mark there for IBIT. And then we have what we call around the office, at least just conversationally, kind of a failed breakout. And then we got symptoms of that when we broke back into a positive trend. Now, the kind of qualification for a failed breakout is an inability to reach prior highs, or at least a rather notable point. So let's just think back to when we broke back into that positive trend. From there, the next level of significant resistance would have been back to late 2025, and when we were kind of up around that 53 to 54 mark. Well, we kind of started to get up into the upper 40s and then ultimately very quickly fell back down. And so again, I'm talking a lot about the chart. So if you're not following along, then, I apologize.
It's available there. But
Yeah.
for those that aren't following along, I mean, we saw a massive leg lower, and I mean, 34 O's down on this chart in January into February. I mean, that whole column happened moving from 55, like you said, down to 35.50. I mean, huge column of O's down. And it basically got to the top of that gap. It's a big leg lower, and you couldn't break higher back into that consolidation point like I was talking about with the horizontal price objective that you mentioned there from November into January. So you had consolidation November into January, massive leg lower, some steady appreciation higher, like you said, moved back to a positive trend, but could not get literally to the box back to that $47 mark where it needed to get to even reach the bottom of the support level that we saw in last November.
It's crazy how some of this stuff works.
It's funny how the X's and O's sometimes do work out. You know what I mean? They're there for a reason.
Well, you've got some, other stuff too. Like you had strategy selling, right?
I mean,
There's a whole bunch of things. And then obviously, like you mentioned too, where's the money for, where's money coming out of retail for, SpaceX or something like that. So the most obvious scapegoat for that type of stuff is Bitcoin. But obviously, point is that this pops up on other charts too, right? And we won't go and look at every single one of them, but this idea of
if you're interested, read the piece.
Yeah, certainly. But this pops up elsewhere where we break back into a positive trend. But as we're looking for confirmation, we can't get back to a really important prior point, whether that's the bottom of a range, whether that's old resistance, whatever it may be. And ultimately, you see it play out in real time as just recently we've broken back down into a negative trend and are within earshot of those 2026 lows.
So what does this look like? Did you try playing around with it on different chart scale? You know,
I have not
changing my chart scale.
Yeah, I'll leave that to you.
Yeah, but I mean, that's at the end of the day, that is some of the stuff that you can do. When you get down to different scales, I mean, because the whole idea with changing chart scales, right? It makes it more difficult to change boxes, makes it more difficult to change columns, makes it more difficult to change signals, right? And so we like to look for consistency. I'm not saying you need to change a chart scale with this. The default scales are there for a reason. But it essentially makes a lot of times what I'd say, if you go from like maybe even up to like a two-point scale, all of a sudden you're just looking at a few column reversals and you can really see that line in the sand around the 44 point.
Right.
Haven't been able, now we're just still in a negative trend. Like the trend, don't pay attention to that, but the signals back and forth just shows you those peaks and valleys on a much smaller scale. Can be fun to play around with. Again, default scales, they're there for a reason. And when we're looking at it now, well, we see current support down at 37.50, which happens to be a spread triple bottom, going back to March, support from March and April on the default chart there for IPO. Support just beneath it at 37. Below that at 35.50 and below that or 36 and below that at 35.50. So a lot of support in the next couple bucks down here. And so if we can hold those levels, also happens to be the bottom of its trading band. Funny how that stuff works out. I mean, we're entering oversold territory, got a lot of support at 35.50 point. If we go much lower from there, I mean, you'd be like, we never know what's going to happen, but that wouldn't be a great sign from a technical perspective.
Certainly not. I've got one final point on this, and we talked about confirmation, not only, again, looking at that false breakout, but also looking at the fund score for IBIT there. Even with the trend break, we did not see a fund score of convincingly above 2. We certainly didn't get anywhere near 3. So as you're looking for, confirmation, as you're looking for strong assets, fall back on the TA score, fall back on the fund score. Those guys are also very helpful guides to tell you, hey, this is a real trend break. They're all real, but this is a bona fide trend break, or maybe this is something maybe that we need to be a little bit more cautious of, because there really isn't the relative strength aspect of it as well.
Yeah, absolutely. Now that's got enough history now. To your point, it's the idea of confirmation, right? I mean, it's, you don't want to just look at the point figure chart. You don't want to just look at one thing. Ideally, fund score is a great way to aggregate several things together. It gives you an aggregated understanding of what to do. And to your point, even when it was moving higher, still not a great score. There's still better areas out there.
Yes, that's the point.
Like
semiconductors.
Right?
Yeah,
exactly. And of course, maybe we just take the top. Although we've been talking about it for weeks, I don't think we can't change it at this point.
Ian, please, man. We got a wedding to pay for. On that note, hey, listen, we appreciate it, y'all. If y'all made it this far, it was wonderful, and we will be back again next week to touch on any updates as they come through.
I do want to touch before we end.
Yes.
For those that are still here, 2 events coming up. If you are listening, you're in the Chicago area, reach out to us. We have a shakeout event that's going to be in Chicago next Tuesday on June, I believe that is 9th. So definitely reach out to us if there's any interest there in the Chicago area. We also have our flagship event coming up this fall in Nashville called Catapult. Going to be a 3-day event, going to be great. Early bird pricing for that is ending at the end of this month, at the end of June. So if you want to come, you want to save some cash, definitely reach out to us. You can find more information on both of those events on the website, dorseyright.nasdaq.com. So that's all from me.
All right. Well, again, y'all, we appreciate it. Hope everyone has a wonderful and safe week, and we'll see you next time.